In this video, we'll be taking a look at a few chart analyses to get you prepared for this week's, price action in the market. We were supposed to drop this analysis yesterday, but I couldn't, make it happen. So I'm doing it today. So just bear with me. By the time you're watching this video, some of the prices might have changed. Okay, so just follow accordingly as it suits your strategy and the chart by the time you get this video. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested to learn Forex like a professional, check out our Forex trading course on Udemy. I have the link attached in the description below. Without further ado, let's get started. So this is the go chart on the 1 hour time frame, right? So we're clearly trading within this range. This is what I, showed you guys last week. And it seems price is, following these key levels as best as it can. So we have our solid resistance level, we have a support level, and we have this middle area of value. You can see we have multiple bounces of this level. Then we had good breakout. So whenever price breaks through this level, it goes through with volume. So you can see the first one happened here, this red massive volume filled candle. Then we have another one here. Then the next time we broke through, we had a very solid red candle, volume filled candle. Here's another one here, a green candle with high volume breaking through, red candle, high volume breaking through, green candle, high volume breaking through, and most recent one here, we have the red candle breaking through this area of value. This means this is a significant area of value. So right now, this is what I'll be watching out for on gold. Let's say if you want to trade gold with a minimum risk, my best guess would be looking for short positions around this level, or looking for long positions around this level. That's if we don't get a breakout, right? So I'm going to show you what I'm talking about real quick. Excuse me, I'm going to get rid of this. So right now for day traders, if you are going to go short, I'm going to wait for a consolidation around this price level, okay, because we are currently retesting the area of value to the downside. So I'm going to wait for a consolidation and then a bearish breakout to go short, aiming for these support levels here. We are going to look forward to opening long positions if we get a reversal or a bullish engulfing candle, a doji. So a candlestick reversal at this price level would be my scenario to go long. Meanwhile, I'm going to wait for a small consolidation here, a bearish breakout as a sign of a continuation for me to go short at these price levels. So I'm only going to consider going long here. Okay, I'm not going to be going long around this area of value. So this area of value is just to act as a guideline to understand what the price action is telling us, right? So what this simply means is breaking down, breaking below this area of value with this red candle simply means there's a good chance we head lower, coming back to this lower price levels. Okay, so that's why I'm going to wait for a consolidation and a bearish breakout as a confirmation that we're going lower. Then I'm going to go short. My stop loss is going to be above the consolidation that leads to the breakout, where I'm going to look for opportunities to go long here. So my opportunity to go long would be waiting for a bullish engulfing candle like we had here. Okay, so following price action, you can see let me go to the 2 hours time frame. Hopefully I think we're going to see something interesting here. Okay, so you can see excuse me, so this is 2 hours time frame on gold. So if you take a look over this price level, we had an inverted hammer. Okay, so this is an inverted hammer at this area of value, followed by a very green, a solid green candle. So this was sign of a reversal, which was an opportunity to go long following this bullish price movement. So I'm going to watch out for same price action around this support level for me to go long. If I don't get that, then I'm simply going to wait for a breakout. So I either going to get a bounce or a breakout. So I'm going to wait for a breakout, a retest, and followed by a bearish reversal for me to go short. So this is the only way I'm going to be going short when we get into this level, or go long when we get to this level, or I'm going to wait for price to probably crawl upwards and give us a good bearish reversal candlestick for us to go short. So I'm either going to go short here, go short when we break this level, or I'm going to go short if we get a consolidation here and a bearish breakout. Then I'm going to go long if we come into this level with a good sign of a reversal, or if we break above this resistance level. So before we move forward, I want you to understand that this week is filled with so many fundamental events. So trade with care, use strict risk management, and follow your trading plan and your trading principle. Okay, you have to be disciplined this week so you don't get wiped out. So that's it briefly for gold. I wouldn't be going too far because on the lower time frame, so on the 2 hours time frame, we're still in a bearish trend, right? So I'm going to be watching what price does within this range. So we're either going to break out of this resistance level or break below the support level, which will tell us where price is headed next long term. So for the short term, this I'm going to trade gold. So moving on, USD-CAD, very interesting chart, and we seem to be trading within a very solid range. So mind you, I'm making this video on Monday and this is a live chart. Okay, so by the time you're watching this video, prices might have changed, so just bear with me and trade accordingly as the price action evolves. So this is a range. On the 1 hour time frame, you can see a solid resistance level. Now we have a solid support level with a very good breakout, okay, breaking this falling wedge, right? So it's a falling wedge because we have price creating lower highs and lower lows, giving us this pattern. Mind you, this falling wedge aligns with a bullish divergence. Okay, so this is a bullish divergence. Price made higher lows on the RSI and lower lows in price. Okay, so this is a bullish divergence followed by a bullish breakout from this falling wedge. Lastly, one more confluence to add to this bucket list is that we have a double bottom. Okay, so this is a 1 hour time frame. We have a double bottom, 1, 2. So double bottom at this solid support level. We had a bullish divergence confirming or signifying there's this significant bullish move coming up, and we had a breakout from this falling wedge, making a higher high. So you can see we had lower highs, lower highs, lower highs, lower highs, lower highs, and now with the current price level we are making a higher high. So this is clearly sign of a good reversal. So the reason why this channel is valid is because if you go to the 4 hours time frame, we are in a very solid bullish trend, right? So long-term bullish trend for USD-CAD. Okay, so yeah, this is it. So this is a long-term bullish trend for USD-CAD. You can see higher highs, higher lows. So this is a very big consolidation over here, and now we seem to be ranging around these price levels here, and we just bounced up with support. So there's a good chance we go as high as maybe 100 pips or 200 pips as the case may be. But this is what I can see on this chart, just for those who are interested in taking action. So if you're not in this chart already, or in this if you're not in this chart already, like someone from our Discord posted a setup like this saying they're already in this chart. So congrats to you if you're already in. But if you're not in yet, I wouldn't jump into a trade here. So I'll wait for a consolidation, okay? A good consolidation around these price levels, followed by a bullish breakout, aiming for higher price targets. So this would make you get a stop loss around these price levels, and take profits is just going to be first target here and second target here. This I'm going to trade USD-CAD. Then I'm going to try as much as possible to take profit as the trade evolves, because we might experience so many reversals this week because of the upcoming fundamental events. Okay, so that's it briefly for USD-CAD. I wouldn't be going short on this currency pair. I'm only going to be going long, and I'm already in around this price level following the analysis from last week. So we talked about it last week. Price played out exactly as expected, and now we've got an opportunity to go long. So I'm going to be waiting for a consolidation like this for those who are not in yet. If you would like to go in at your own risk, of course, wait for a good consolidation, get a bullish breakout, then you can join the trade. Moving on, we're going to talk about Nasdaq. A very interesting chart as well. Currently in a bullish trend on a 1 hour time frame. Okay, so I'm not going to go to the higher time frame because this 1 hour time frame explains almost everything. And the next area of value, okay, the next possible area of value is around these price levels. So that's why we are going to be focusing on the trend we have in front of us. So this is a bullish trend, and we're going to look for opportunity to go long. How do we go long? You can see I marked out these important areas. So we have a very good support level here where we had 2 good bounces, and now we've had a good resistance level, 1, 2, 3, currently the 4th try, right? So remember what some core principles of technical analysis, that when price tests a level too many times, it is bound to break, especially if it aligns with the trend. So this is a bullish trend, so there's a good chance we break through this resistance level. So I am going to go aggressive on this one. Okay, I'm going to go long immediately. We get a very good candle close above this resistance level, because I don't see any reason why I want to wait for a consolidation or a retest. Personally, I'm going to go aggressive. So you can decide to go to be a conservative trader. Okay, you can either be conservative and wait for a retest if you trade a very strict risk management. So I have my own risk management principles. That's why I will be going long immediately we get a candle close above this resistance level. The reason is because it's going to give me a good stop loss level, because my stop loss is going to be below this consolidation. So my stop loss is going to be around these price levels, and my take profit is going to be around these highs where we have our valuable area of value. So this is the reason why I wouldn't be waiting for a retest, because the risk to reward ratio is just good enough for me, and I have my personal risk management principle. So the reason why this is an area of value is because of this. So I'm going to go to the higher time frame. So 4 hours chart, I'm going to show you something real quick. So if you zoom out, so this is going to load in a minute. So you see, so this is our area of value. I'm going to shrink this a little. So you can see this is where we have the next possible resistance level. That is why I am going to be going aggressive when we break out from this resistance level, aiming for this area of value. So you can see this is clearly a good area to take profit. So I might not hold the trade all the way to these highs. I'm just going to trail my position as the price action evolves. So this is how I'm going to trade Nasdaq. Okay, I'm not going to be waiting for a retest. I'm simply going to wait for price to take out the resistance level before I go long. So zooming in just to show you this once more. Don't mind me, my internet is a bit messy today. I have no idea why. So this is our resistance level, and I'm going to wait for price to close above that resistance level for me to go long, aiming for our price level around this area of value. So bear with me, please. Internet is terrible right now, so that's why this chart isn't loading, but I believe you've got the idea. So here we go. So my stop loss is going to be below these lows. Take profit is going to be closer to this area of value as the trade evolves. So moving on, we're going to talk about crude oil real quick. We are currently within a range, though this is a bearish trend. Yeah, so crude oil is in a bearish trend where I think there's a good chance we bounce off of these lows at least for 100 or 200 pips before we retest again to get our breakout. So I'm going to be watching these levels closely for me to go long if we don't break below these price levels. Okay, so this is a very good support level. So for those who are interested in going long, just watch closely. Watch closely, wait for those reversal candlesticks or a good signal signifying that price is going to go higher. Then you can go long at a very, very low risk. I don't recommend this because we're in a downtrend, so it's not ideal to go long. But if you would like to take some risk, you could go long around these price levels when you get a confirmation, aiming for 100 pips or 200 pips as the case may be. So don't hope for too much, because I think we're going to get something like this. So we might just get a small consolidation around these price levels before we get the final breakout, taking out these lows. So just to catch some pips when we get a reversal, that's the reason why I'm recommending you could go long with a very small risk if you're interested in doing that. But personally, I don't think I'll be going long on this because it's too risky for me. Okay, but this is what I watch out for to go short. So if we do get a consolidation around this price level, okay, followed by a bearish breakout from that consolidation, this would be my scenario to go short. Okay, so this would be my scenario to go short on crude oil. This is crude oil on a 1 hour time frame in line with the downtrend. So this is a downtrend. Yeah, this is a downtrend on crude oil. So I will be waiting for a consolidation around this price level and a bearish breakout to go short if we indeed get that consolidation. But if you're interested in going long, then I'm just going to wait for some sort of candlestick reversal pattern on the higher time frame. So I'm going to show you one, for example. Let's say on the 4 hours chart. I hope, yeah. So on the 4 hours chart, you can see we have a good, So on the 4 hour chart, you can see we are having some sort of price rejection right now. So if this candle closes as a doji, then I'm going to watch the next candle to see if it closes as a bullish engulfing candle. Then I might consider going long, right, for quick profit, because there's a good chance these levels will break anytime. So this is my brief outlook for crude oil. Lastly, we're going to talk about USD-JPY. So this is the USD-JPY chart on a 4 hours time frame. You can see this is clearly a bullish trend, one, and we had a very good consolidation around these price levels, giving us an ascending triangle followed by a bullish breakout from this ascending triangle. It's an ascending triangle because we have price creating higher lows going all the way to this resistance level, right? So we had a good breakout, we had a retest, and now we seem to be consolidating above this solid resistance level. So I wouldn't be going short on USD-JPY because this is clearly a bullish trend, and this pattern up here is clearly a bullish continuation pattern, and it will be confirmed if or when we get a bullish breakout from this sloping trend. Okay, so that will be my signal to go long. So I'm going to go down to the 2 hours time frame so we can see this clearly. All right, just give me a minute. Slow internet today. I'm sorry about this. I'm gonna try to get this fixed before for our next weekly analysis. So here we go. So this is our current chart pattern. So this is a descending triangle, right? So we have a base, which is our support level, and we have price creating lower highs. So I'm going to be waiting for price to break through this price level for me to go long in line with the bullish trend we have on USD-JPY. So there are a few number of ways this could happen. We could get a consolidation around this price level, right, before price makes its final decision to break out. So this would be the best case scenario for me, in my opinion, because by the time we get our breakout, my entry is going to be around these price levels. After the breakout, stop loss is going to be below the consolidation that leads to the breakout. Then first target is going to be around these highs. Then I trail the rest of my positions. So this is how I'm going to trade USD-JPY. I wouldn't be going short for any reason. There's no need to go short because this is clearly a bullish trend. We are currently consolidating for a bullish continuation pattern, okay, as a bullish continuation pattern. So that's it for me briefly for this week's analysis. If you love the content, please like, subscribe, and leave your thoughts in the comment section. If you're interested in learning to trade Forex like a professional, check out our course on Udemy. I have the link attached in the description below. And bear with me, guys, this was done on Monday, and by the time you're watching this video, some of the price might have changed. So trade accordingly, use strict risk management, and pay attention to the fundamentals this week. That's it for me, guys. See you next week.